Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 6th of August. All right, now as we start to enter into the Asian market for Tuesday, we've got a few, well, I guess you say a lot of things developing, a lot of weird things, right? So when it comes down to geopolitical events and something as major as what the US saying the Chinese are doing, manipulating their currency, you're really starting to look for other things to sort of trade, almost get out of the US dollar and start looking at the pairs that are either strong or weak and sort of match them up. But let's just have a look what's going on. This is where all the weirdness is coming from. Now, just recently, the US have designated China as currency manipulator for the first time in decades, right? China has been manipulating their currency for decades. But right now, this current weakness in the yuan is all to do with Trump's tariffs, right? Making it harder for them to compete, selling less products. Of course, it's going to drive down their currency. So for them to now come up and say that they're manipulating the currency, it's quite ludicrous. But the actual sentiment of the comments is the main part of it. And this is where, if you go back to trade wars with the US and Japan in the early 90s, it was all about sort of text of what language they were using. So basically they're saying you cheats and, we're not happy with it. So that's the main aim of this. Now, what you'll find is when the major currency pairs go into a state of sort of imbalance, I guess you could call it, like we have here at the moment on the analysis, where you've got all different pairs going in all different directions. There's specific events obviously impacting certain locations, like the UK. We've got Brexit, right? The safe haven trades, dollar yen, dollar Swiss, okay, they are continuing to look to the downside as the market tries to work out what the hell is going on with the US dollar. Okay, up the top here, the dollar index itself is, on the hourlies it's going up. Sort of down, sorry. The dailies, it's come back a fair bit, but still it's in that current uptrend, and the weeklies is all over the place. Australia and New Zealand directly attached to China at the hip. We've just had some recent employment numbers out a few hours back, and they were exceptionally strong in New Zealand, following the sort of trend of global employment. I did read something yesterday or the day before that the number of people who have got two jobs in Australia is at unprecedented levels, which tells you that they are swallowing debt and they are finding it very hard to cover expenses, even with in their current economic environment. And that's a scary thing in itself. So what we've got is a situation where the major pairs are all over the place, right? So you're trying to work out. Now, this is, to me, is where are the trading opportunities? And I've got this question quite a lot. So euro, right? It's just starting to go up. It's back in the range on the weekly and the daily charts. It's going up. The overall sentiment, we know fundamentally, is down from the ECB, but it doesn't change where the currency is going just at the moment. To me, it will turn down, but it's just a matter of weathering the storm or the Trump storm with regards to the Sino-US trade issues. So Euro's going up. Okay, let me just show you. Aussie's going down. So it's a situation, well, yeah, buy euro, sell Aussie, right? But that trade is already on the way. So what you have to do is, when the markets are moving, is try and keep abreast of what is going on, which pairs are going to be impacted directly from the current raw nerve, which is the China-US situation. Aussie and Kiwi are. Now, the Kiwi, we may have a potentially good trading opportunity here. Short-term economic numbers out of New Zealand suggest, employment's going through the roof. They probably won't be cutting rates anytime soon, but this is short-term. So, we do have the RBNZ tomorrow, so we'll get more information from them. I'd say they'll be very concerned about the Chinese, the impact on China with regards trade and how directly that's going to impact the New Zealand economy. So, to me, looking to get short Kiwi probably is the smart play, in that strong employment numbers gives us an opportunity to get into that trading opportunity. Another thing to know, when these major events occur, geopolitical events, the data becomes super sensitive, right? We had the ISM non-manufacturing data out yesterday, weaker than expected, and that added to the weaker dollar picture. and that sort of was probably the catalyst for that big sort of spike up in euro, as well as, and I'll show you the charts in a second, what we are seeing is we had a clear direction from the Fed. A lot of fund managers, a lot of traders everywhere went short euro, short Aussie, short Kiwi. They probably left sterling alone. And what we're seeing is a clean out of those short positions that were based on fundamental macroeconomics. Okay, this is just a clean out of these moves. So the dollar is sort of drifting lower. We're now seeing unprecedented moves here. So the yuan went from 6.97, it's now at 7.13. This is not too dissimilar, as I said yesterday, to the Swiss National Bank situation where they walked away from the 120, the figure peg in Euro Swiss on January 15, 2015. So we've got some very weird things happening. If I just show you the major currency pairs, right, it's a matter of trying to piece together what's going on. So here's the euro. You can see it sort of just, it's flying through these levels. It's come up to the last sort of resistance level. Now, this to me is not a genuine move. It's a clean out of short positions and a bit of a scramble around this risk off sentiment, which is causing a bit of uncertainty around the US dollar. Here's that little spike higher in the Kiwi based on the Kiwi employment numbers. To me, this is a short-term move. I mean, this situation with China is not going away very quickly, especially with the way the US is using terminology like language that China is manipulating their currency. That's a big slap in the face. Aussie is the one currency pair at the moment, which is sort of just drifting nicely to the downside, but we do have the RBA interest rate decision this afternoon. Now, no one's expecting any changes in rates because inflation a week or so ago was not very strong, but it was stronger than forecast, and that's going to keep them on the sidelines. But they will be probably erring on the side of caution with this latest development. Safe haven trade, well, it hasn't really stalled, but you wouldn't expect this thing to drop 100 points every day. It is consistently just trending lower, and that can change at any time as well if Trump sort of backs away from his aggressive stance at the moment. Brexit, well, you know what? Sterling, as it has been, it's doing its own thing. It's on the sidelines. No one wants to get long. No one wants to get short. We're still waiting on Boris Johnson to give us more details about a potential no-deal Brexit or a deal Brexit, and that's in the pipeline. Dollar CAD, well, I'll tell you what, this thing is just cruising along like nothing is happening at all, right? So that's where you got to understand the main action here is in the pairs related to the releases. So, of course, Aussie and Kiwi connected to the hip with China with their export markets. We're seeing a big flush out of positions on euro with that US dollar weakness. And that's all we can see at the moment, which is clear. So if you come back and have a look here, say, for instance, the Aussie dollar, right? If you come back to the main pairs here, like Euro Aussie, yeah, okay, Euro's currently showing signs of strength with that current rally in Euro and Aussie continuing lower. So, of course, you're going to see a big spike higher. I mean, and this is easy in hindsight. Let me just tell you that. Like, it's easy to go and find those trades afterwards. But so you've got to have a look at the pairs which are outperforming other pairs to find the trades before they actually occur. Euro Swiss, of course, the exact same thing as the Euro. Okay, so very clear situation here where you can find specific pairs. So if I bring you back to the MyFX Trading Hub, what you want to be doing is not just looking at the major pairs themselves, but by looking at the majors, you can start to identify which pairs are going up and which pairs are going down. Obviously, the Aussie against the dollar going down, dollar Swiss, okay, it's going down, which means the Swiss is going up, a natural trade Aussie Swiss. So when you're looking at this, start to piece together the potential cross pairs, the cross rates that you can get into these trades. Okay, obviously the yen crosses, especially Aussie yen, would have been a hell of a lot lower, and you can start to place it in. I think Kiwi yen, this Kiwi spike higher in Kiwi and dollar yen, I can't see it changing its direction anytime soon, but I can see Kiwi turning around, potentially by tomorrow. Kiwi yen to me is starting to line up as a potential because that, once again, those employment numbers give it a short-term kick to the top side, but overriding are the fundamentals which are driving it lower. Right? Hopefully that makes a bit of sense to you. So right at the moment, just be very careful with what you are trading and managing your risk. Now, we have a the only major event coming up today is the RBA interest rate decision and statement. So a lot of the movement will come back to looking at the other markets. Now, if I just give you a look at the sort of back to that sort of dollar page, the equity markets took a bit of a bloodbath in the US. Okay, let me just flick that back over to my main page, and you'll start to see here down the equities down, 3%. Okay, this is like alarm bells, right? You start to see some panic in the equity markets. You're going to start to see some panic in the dollar, and this is what we're starting to see because the market doesn't really know where the direction is. If it doesn't know where the direction is, they will start flushing out positions. If we see the Dow going up to 3% tomorrow, you're going to start to see massive liquidation across the board. Maybe the safe havens are the place to go, the yen and the Swiss. So keep an eye on those pairs as we go forward. As I said, there's no major data coming out, so it's all going to be geopolitically driven from probably Trump or China. You've got to expect China to make some comments today with regards the US's latest language around them manipulating their currency. Okay, and this is probably the first time in a long time that I feel that China aren't manipulating it. It's Trump that's pushing this thing lower, and that's exactly what we're seeing on the charts. If the dollar index breaks down through 97.20, well, you know what? It's probably going to be over for the dollar. We are going to start to see some weakness in the dollar, and even though the Aussie dollar is coming off with weak fundamentals, we may see it spike on the back of a weaker dollar, right? Go figure. It's going to be a little bit confusing for a little bit until everything settles down. Just keep an eye on the major pairs. Keep an eye on the upcoming releases. We probably need things to calm down, and they probably won't do so today just yet. We've got the RBA, the RBNZ tomorrow, but I'm waiting for China to come out with some major backlash, more tariffs on the US, etc., to really spark things up. All right, guys, that's it from me. Pretty loose situation at the moment, but there is some gold in the detail. You just got to sort of dig deep and find the trades that are ready to go. All right, guys, have a good trade day. Catch you later on. Cheerio.